Good morning, friends. On the call, I'm joined by Mr. Ashok, our CFO, Samarth Agarwal, GM Finance, and SGA, our Investor Relations Advisor. The results and presentation are available on the stock exchanges and our company website, and I hope everybody has had a chance to look at it. The building material sector has been a mixed quarter led by subdued growth in the real estate market. In the recent budget, many schemes like Pradhan Mantri Awas Yojana, Affordable Housing Fund, credit-linked subsidy schemes were encouraged. They plan to build as many as 31 lakhs homes in urban areas and 51 lakhs in rural areas in financial year 18-19. For all the building material players, I believe the opportunity is getting bigger as the market size will get bigger in the coming years. GST rates were revised in November, and I'm happy to share that all the products of Greenlam are now at 18% GST. This gives organized players like us increased power to gain more market share. It reduces the price gap between us and the unorganized players. Our performance for the third quarter ending December has been better in the domestic market. Demand for laminates in the domestic markets were reasonably good. Exports saw moderate growth in volumes, but due to currency appreciation and the adverse impact of GST, value growth was largely flattish. In the decorative veneer segment, we had a good growth in the decorative veneer panel products, which was due to good demand and also due to the lower base in quarter 3 of financial year 17. The engineered floor and door segment too had a reasonably decent quarter, and we think in the coming quarters business will get ramped up, hopefully at a better pace. We've been in this market for more than 2 decades and have created a long-lasting and value-added product portfolio for our customers. In terms of quality, design, fashion, we are on top of the consumer memory, and we also aspire to create a value addition in their life and in their desire to do better interiors. And we believe the opportunity for all the product portfolio, all the products we have, is getting larger, and we are fairly well equipped to service our customers across the country and in the global markets. We also desire to form a brand Greenlam, Mikasa, and Decowood as a definition of trust, faith, and belief. I would now like to hand over the line to CFO Ashok to take you through the financial and the operational highlights of the company, post which we'll be happy to address your queries, if any. Ashok.
Good morning, friends. Now I'll take you through the financial performance of the company. For the quarter 3 FY18, on consol basis, revenue for the quarter grew by around 16% to 280 crore compared to 242 crore in Q3 FY17. Gross margin was at 48.1% against 48.5% in Q3 FY17. EBITDA for the quarter was at 39.1 crore, a growth of around 30%. EBITDA margin was improved by 150 basis points from 12.4% last year to 13.9% this quarter. PAT for the quarter was at 17.4%, a growth of 82% over previous year same quarter. Our domestic sales increased by around 29% to 171 crore, and exports remained flat at 109 crore. We were able to reduce the debt by 23 crore in this quarter and stood at 273 crore as against 296 crore in Q2 FY18. Net working capital improved by 18 days from 106 days in Q3 FY17 to 88 days in this quarter. Now I'll give you the financial performance for 9 months FY18 on consol basis. Revenue grew by 6.4% to 834 crore. EBITDA for the year is at 110 crore against 95.5 crore in last year same period. EBITDA margin was at 13.2% against 12.2% in 9 months FY17. PAT grew by 47% to 46.7 crore this year. Our domestic sale increased by 19% to 503 crore and exports degrew by around 8% to 331 crore. Now I'll move on to segmental performance. Laminate and allied products constitutes around 84 to 86% of our sales. For the Q3 FY18, laminate recorded a sale of 235 crore, a growth of around 11%. Sales volume for the quarter were at 3.26 million sheets, a growth of 10.7%. Production volume were at 3.37 million sheets, a growth of 18% with a utilization level at 96% on expanded capacity. Our average realization for the quarter was at 701 per sheet as against 683 last year, same quarter. International business contributed to 108 crore, that is around 38.4% of total revenue in this quarter. For the 9-month FY18, sales grew by 4.3% to 718 crore with EBITDA margin of 13.7%. Volume sales growth was 8.3% to 10.11 million sheets. Production volume were at 10.47 million sheets with a growth of 12.4% and a utilization level of 103%. Average realization was at 692 per sheet against 701 per sheet in 9 months previous year. Moving on to decorative veneer and allied products, which forms around 14-15% of our sales. For the quarter ended, for the third quarter, this segment has contributed higher sales due to rising demand of the product. Our sales was at 45 crore against 30 crore in the Q3 of last year. EBITDA stood at 6 crore with a margin of 13.3% as against 2.4% margin in Q3 last year. For the 9-month FY18, sales grew by 22% to 115 crore as against 94 crore of 9-month FY17. EBITDA stood at 11.5 crore with a margin of 10% against negative margin of 2.2% last year same period. In the veneer segment for Q3 FY18, capacity utilization for this quarter stands at 46% with a volume sale of 0.49 million square meter as against 0.27 million square meter last year same quarter. Average realization fell by around 13% to 706 per square meter. For the 9-month utilization stands at 37.4% with a sales volume of 1.21 million square meter. In the engineering wood floor business under the brand Mikasa, we have clocked a sale of 17.9 crore for 9 months vis-a-vis 11.4 crore in the last year same period, having a growth of 57%. Engineer door segment has clocked a sales of 10.2 crore in 9-month FY18 as against 8.8 crore last year in the same period, having a growth of 15%. For 9-month FY18, losses for both doors and floors were reduced to 6 crore as against 11.6 crore 9 months FY17. That's all from our side. I would now like to open the floor for question and answer.
Thank you. Ladies and gentlemen, we will now begin with the question answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. A reminder to all the participants in the conference, if you have a question, please press star and 1 at this time. We take the first question from the line of Ashish Poddar from Anand Rathi. Please go ahead.
Hi, good morning, sir. My question pertains to your exports business, so which contributes significantly to the top line, and where we are seeing that the growth is not coming in. If you could throw some highlight in last 1 or 2 quarters, what has been the progress there and what is the outlook there?
So if you look at the export segment, like we said earlier, the quantity growth in the Q3 has been 7.7%, and in dollar term, we have grown by about 4.5%, approximately 5%. So the flattish growth or negative, like we said earlier, is primarily due to three particular reasons. One is in general, the growth would have been higher if we sold more volume. So clearly, that's not happening at the pace we wanted to happen. The second point is the currency appreciation, and the third point is the GST. Because of GST, the export incentive percent at the HP unit, which was under the excise-free zone, and rather still is under the area-based exemption scheme. So there's a math adjustment of that, which shows the lower degrowth. So in general, we remain positive on the export business, and we are working to continuously grow the business. And so as such, there is no fundamental problem to the business, or there's no core challenge. We just need to continuously, work towards increasing this.
So there's no market-related issues in exports.
Yeah, that's what I'm saying. So there's no core fundamental problems, as such in exports. So all this contributes, shows a weaker picture. While on ground, it's not so bad as we can.
Okay. My second question is on your engineering doors business.
Yes.
So what kind of potential we see in this business? Today it is very small for us, but what kind of potential we see in this business, and also if you can highlight on the veneer business.
So I'll take your second question first. So the decorative veneer and allied business is broken down, as you know, in three categories. There's decorative veneers, there's Mikasa flooring, that's engineered wood flooring, and engineered doors. So in the flooring business, our capacity is to produce 1 million meters square annually, and the market does exist, to consume that amount of production. Obviously real estate, newer construction, premium condominiums, premium developments, premium hotels are the most potential market for this product category. So obviously we are growing, but the base is very small. So I think as we move ahead, so we are quite positive on the business. The product's well accepted. The quality is quite good. The range is quite nice. We built a recently decent brand in a short span of time. So I think we just need to keep working towards expanding the network on one side, and also look to get more projects. So it's a dual strategy. So the distribution network needs to be continuously expanded to get the retail sales, and the project business needs to go up for condominiums or apartments, hotels, etc. And yes, so
any number you would like to share? What kind of top line you are expecting or you're targeting for FY19-20, or any figure in your mind?
I would not want to give you a figure right now, but I can just say that our endeavor and we are working towards building the business. So first step right now is to stop losses at the EBITDA level, which we hope in this quarter we can control. The next step would be to stop losses at the PBT level, and then obviously grow the business. And hopefully with markets opening up a bit more, that will also help the entire situation.
And will this business have similar margins compared to laminates, or better? Any view on that?
So typically the entire decorative veneer category, the veneer, decorative veneer and allied category will have higher margins than the laminates business. Once it is at the right, at the optimum level of volume of business. So if you see until now also in this year, if you see the 9 months data, I think we have similar higher margins. So EBITDA margins in the decorative veneer only business is at about close to 20%, and laminates is at about 13.7%. But if you add the losses of flooring into, obviously margin shrinks down to 10%. But at an optimum level, the decorative veneer and allied business should have higher margins than the laminates business.
So, looking at your current capacity, what kind of revenues you can generate at 100% utilization, if you can highlight some?
Yes, sure. So, in engineered wood flooring, are we talking of this subject?
I am talking about all the three segments.
So, engineered wood flooring on 100% capacity, obviously it will depend on the price points, but typically it will be 200 and 225 crores, kind of a top line on 100% capacity. veneers, talking of 100% capacity is a bit hypothetical because we don't expect to run the plant at 100% capacity because of the size of the market and the nuances involved in the business. So I think talking of 100% there, is a bit illogical. It'll just be a theoretical number. Flooring, the door segment, on a full capacity, we're talking about 80 to 100 crore kind of a top line, depending again on the value mix, order mix, pricing, etc.
But even if we assume at full capacity veneer, what kind of revenues we can generate? I'm not talking about your guidance, but in general, what kind of revenues it can generate?
Well, if you talk of full capacity, you're talking of nearly 100,000 seats a month. So they can generate up to 300 CR of top line. Yeah. Maybe
Okay.
more. Yeah, but that's not relevant.
Yes, I can understand. Thank you so much.
Thanks.
Thank you. We take the next question from the line of Prashant Kutty from Sundaram Mutual Fund. Please go ahead.
Yeah, hi. Thank you for the opportunity, sir. So firstly, in terms of the laminates business, is it safe to say that probably demand trends have kind of improved, let's say, from a more secular perspective, because the last couple of quarters, demand seems to have kind of picked up, or is it just a function of base? Especially I'm asking the parlance of, because GST is kind of passed through, e-way bill is also expected to come. So are we seeing a clear shift from an unorganized to organized? Just asking some qualitative comments on that part.
So I don't think we're seeing a clear shift. It'd be wrong to say that. So post GST, yes, we have passed on all the price benefits to the market. So that has narrowed the gap between us and the local producers. But the tax non-compliances of the local producers or unorganized play at this moment at least, is continuing.
Mm-hmm.
So have you seen a clear shift? I think too early to comment on that. Our growth, I think, is also because of a lower base.
Mm-hmm.
Yeah. So really, especially we're talking domestic space here. Mm-hmm. So in domestic, we're talking about 18% kind of a top line growth in 9 months. So I think it's more of also due to the lower base of our lower base rather. Yeah.
Okay. But can we probably say that maybe things are, looking good, because here in our demand we would have one which is retail and one which is project business as well.
Right.
So when you say that, which part of the demand would actually be driving at this point of time, or any trend on that front?
Well, I think there's not much shift in the percentage of demand between the retail and the projects or the commercial business.
Okay.
And I know it will be unfair to say that demand's looking very good and all that. So I think it's really us trying to push and to keep. Obviously there are gaps in the business. There'll always be. So there are adequate opportunities for us, and we said that earlier. In the distribution space, in the OEM or in the OEM segment, in the project segment, we had launched new products in laminates. There was a new range launch. So I think all of these factors are kind of helping us to grow at the percent we are growing. But on ground, I will not be able to say that demand is really good and all that.
Okay. Got that. Surely. So second point is on the decorative veneer side. While we've almost seen a very sharp kind of a jump in the last couple of quarters again, profitability also looks to be pretty strong over there.
Sure.
Anything that we are doing which is a little different over, because again this is a little more niche market. Is it that probably the demand over there is kind of changed, which is something to call out over here specifically?
Right. So actually, if you see the sharp growth which you're seeing this quarter, in value, the veneer business has grown by nearly 62%.
Right.
And overall, the veneer allied is by 50%. It's again, I think, the lower base of quarter 3.
Mm-hmm.
So it's not again because demand really shot up and all that. Obviously, we've been continuously working to expand our market, our business. We spent a fair amount of capital in brand building, distribution, new products, marketing, which we've been saying that over the past 2-3 years.
Sure.
So I think it's like it's WIP. So yeah. So on ground, and anyway the base is still small. So in flooring, in door, and even in veneer, the base is still small. So these sharp increases are not necessarily because demand is good. It's also because of base is low and the denominator is low.
Sure. The third question is on the floors and the doors business.
Yes,
While you did highlight that the capacity utilization is definitely lower, and the market for them is largely the projects business, the real estate side of it. Could you please tell us over here, sir, what do we need to do from a distribution perspective over here? Because while I understand on one side you said that there is distribution gaps in the laminates business which we are still trying to kind of
Sure.
bridge. Here the distribution gap seems to be a little more larger because the projects business,
Sure.
I guess. So what are we doing on that front, sir? If you could probably give us some
Sure.
sense on that front.
Yes, I will. So, in the door business, we are not looking at setting up a distribution model.
Okay.
We are just focusing on 5, 6 large, metropolitan cities and working on the projects with the developers, builders, and architects to get the product. So it's more of a setting up the logistics, supply chain, installation mechanisms, measurement taking mechanism, and those are the challenges on the door side. It's not about distribution.
Mm-hmm.
On flooring, because there's also retail demand, home improvement demand, renovation demand, newer homes. So there, I think it's WIP. I don't have the math right now, but there are still markets across the country where either we don't have dealers or we don't have effective dealers, even if they're appointed. So I think it's still continuing, and it will continue for a couple of more years. By the time we say that physical distribution is quite well entrenched for the Mikasa flooring product.
Any commonality over here which we can kind of try to achieve with the laminates and the veneer part of it? I mean, or
Sure, there is, because in the residential and commercial spaces, architects don't necessarily only use laminates, veneers, or flooring independent of each other.
Okay.
So some projects there are commonalities, some they are not. So yes, and we are working towards that common goal of the company.
But definitely the market is definitely picking up. At least there's a market for the projects business as far as these products are concerned at this point.
It's mixed. So it's tough to say market's picking up. Sometimes our numbers don't reflect, what's happening in the market. So, I think there are a lot of gaps in our business, and our domestic sales base is also small vis-a-vis many other building material companies. So I think we have a long way to go on that perspective.
Lastly, one bookkeeping question. What's the capex plan as far as laminates is concerned? I mean, what are we looking at given that we already at about 105% utilization? Anything on that front which we're looking at? And technically, how much can this current capacity go up to in terms of...
So laminates in the past also we've gone up to 115, 120% utilization. So this capacity can also go to 150, 120% utilization.
Okay.
So as we talk right now, we have not planned another capital expenditure in the laminates business currently. Yeah. And we are yet to effectively utilize, the capacity, we put up in the month of June. So really the focus is to, at this moment, drive out the utilization of the existing units.
Okay. So no such big plan expected as far as capex is concerned?
Not something which I can say now. Yeah. Obviously, we have plans to expand the business and grow the business, but nothing which is concrete which I can tell you right now.
Sure. Thank you very much, sir, and all the very best to you.
Okay.
Thank you. Before we take the next question, I would like to remind all the participants, if you have a question, please press star and 1 on your touchtone telephone. Next question is from the line of Achal Lohani from JM Financial. Please go ahead.
Yeah, good morning. Thank you for the opportunity. My first question is in terms of the realization. If I look at the realizations, they seem to have improved in the laminate space. Is it that we have taken any price increase in the last quarter, or is it purely on account of the product mix?
Yeah, there was no price increase in the previous year quarter.
Okay.
It is majorly on account of improvements in the product mix.
Got it. Secondly, what I also wanted to check in terms of the area-based exemption, the unit what we have there.
Yes.
How do you deal with? I mean, have you accounted for the refund? Have you started getting the refund from the government? What is the visibility on that part, and how have we treated that in terms of the pricing of the product?
Yeah. So in terms of area-based exemption, as per the government this one notification, this will be available 58% of CGST on the cash duty paid.
Okay.
So till December, most of we didn't pay virtually any cash duty because the previous balances were in the books. Earlier they used to collect on the even on the import which is required for export also we need to pay the duty, and export being 0%. So those all input credit was available. But very small part which has been accrued, which is accrued in December of around 35-40 lakh rupees, that has been filed and accounted for. And in the future, whatever credit will be, whatever we will get, because this will keep on fluctuating, because this is based upon what actually cash payment is being made to the government. So that will be accounted for in terms of taking this account into the pricing, since the benefit which we will be getting is not very fixed and certain. So we are not taking any effect of this into accounting in the sales prices.
Understood. Sir, if you could comment in terms of the volume growth outlook, how do you see in our individual product segments, let's say for next 2 to 3 year perspective?
Tough to give you a 2 to 3 year perspective, but I think laminates should grow at what volume 7 to 8%. Veneer should be at a similar levels. Flooring though probably will be higher because of a low base. Yeah.
Okay, and how do you look at the margin performance? Because I think last time around you had indicated it can be a 17-18% kind of a margin at the company level.
Right.
How do you see that, in terms of the outlook?
So if the volumes get ramped up, if you look now also, so we have adequate capacities in flooring, door, veneers, laminates. So if the volumes get ramped up and with minimal further, cost increases to be done other than the, annual wage increase, margins should improve. So I think it's a process, and we are working towards that. Yeah.
So Achal, this is what sir is that time also. It's over a period of time.
Correct.
When the 2 new product, floor and door, which is generating as of now the negative margin, they are also a bit matured and reach up to certain level and start giving the positive margin. So all put together, maybe a period of over 3-4 years near to that can be achieved.
Got it.
Because as of now, the existing product will be in the range of around 14.5-15% margin, okay, and which is also will keep on increasing, and as obviously the doors and floor also will start contributing.
So the delta will be more from the doors and the...
No, it is from the both, because the existing also, as we are ramping up the volume, the incremental margin will be better than our existing margin. So both of these will help in terms of achieving that target over a period of next 3-4 years. Got
it. And just in terms of the exports growth, you said the volume growth was about 7.5% for the quarter.
Yes.
But the currency appreciation did take a toll. How do you deal with that now, in terms of A, the volume growth expectation, and B, in terms of the pricing?
Yeah. So in terms of, as you say, the quantity growth, which is 7.7% in this quarter. If I talk about the growth in dollar terms, which was around 4.5%, 5%, and but since the currency appreciation is still there in this year, in this quarter also, so which we believe over a previous year the currency was in the range of 65, 66. This year it was in the range of 63, 64. But now at this level it is more of a kind stabilized. And as of now we don't foresee that it can go to 61, 62 level. So we believe it's a more of a base effect. And once that base effect goes, so this 4.5% difference what is there, that will probably go, and we will have a normal growth in terms of exports also.
Got it.
And in terms of...
Yeah.
Pardon?
Margins are similar in case of exports vis-a-vis domestic?
At a stable currency level, in the past we have seen that margin remains the same. When the currency fluctuates, since now the currency is appreciated a bit, so that's why some of the margin in exports will be lower in comparison to domestic. But in a stable currency, margin of both the domestic and export remains to be same. Couple of percent here and there might.
Got it. That's it. Thank you so much, sir.
Thank you.
Thank you. We take the next question from the line of Pritesh Chheda from Lucky Investment. Please go ahead.
Sir, was seeking some comments on the working capital and the ROC. So we see a good reduction in the working capital, purely by the creditors' days. So first, is it sustainable, and what kind of incremental reductions are possible, and your comments on the ROC also?
So if you see the working capital, we've improved on inventory days also, and we've also improved on the debtors days by 7 days. And yes, there's a increase in creditors day by 7 days. So it's unfair to say that the improvement is only coming from the creditors. There's improvement on the inventory and the debtors also. What is the second question? Whether it's sustainable, is it?
So on the sustainability of this, because there is I think about 9 days reduction, which is
from Q3, I think there's about a 18 days reduction.
Yeah.
And from
9 months to 9 months.
Yeah, 9 months to 9 days. Yeah. Q3 and Q3 is 18, but yeah, you're right. 9 days on 9 months. So yes, it is sustainable, and we've said this earlier. As we end up increasing our production and sales, our range of products, our SKUs for the product don't increase in the same proportion. So if you were to dissect this working capital days across various categories, which maybe at a later point you can do with a show, our working capital days in laminates is far lower than what it is in flooring and doors, and veneer is lower than flooring and doors, because in flooring and doors we have all the raw materials, the entire range in place, while sales haven't taken off. So yes, it is sustainable, and our endeavor is to still work towards improving working capital days better.
Okay. Yeah. Thank you.
Thank you. A reminder to all the participants, if you wish to ask a question, please press star and 1 on your touchtone telephone. Next question is from the line of Nehal Shah from ICICI Securities. Please go ahead.
Hi, sir. Congratulations for good set of numbers.
Hi, Nehal.
Hi. Sir, on the veneer side, now we've seen one of the best quarters in terms of volumes in decorative in the veneer segment.
Right.
Now, has that come in from natural veneers, or is it that the new product or the other recent launches like teak and recon veneers have contributed? Because I think the realizations have been down on the veneer side.
So, majority of the growth of the revenues of whatever 34.5 crores.
Yeah.
In terms of growth, it's come from the other segments, which have nearly doubled, right? But the national veneer business also has grown, in value by nearly 35-40%. So it's combination of both, because national veneer already we have a little bit higher base.
Right.
So really, it's from both, but the newer segment, the teak and the engineered, have contributed, in terms of growth, it's more than double actually.
And that's why the realizations are a bit down.
Yes, realizations, but yes, correct, yes.
Right. And so
also as volumes pick up, although the margins improve, EBITDAs improve because expenses don't go up in the same proportion. Largely the costs are fixed, the variable costs as a proportion should come down. So yes, although realizations do come down, but with high utilization, the margins expand.
Yeah. But do you see the shift in trend in the veneer business? Because if you look at last, say, historical 15-16 quarters, our volume has been in the range of 0.35 million sheets to 0.49. Now this is one of the largest we have seen in last several quarters. Do you think the trend is moving towards, say, probably we are moving at, say, a range of, say, 0.5 to 0.7 million sheets with the kind of growth we are seeing at the moment?
0.5 million sheets?
Million square meters, sorry.
Million square meters, yes. I also hear what you're saying. Yeah. So they are tough to tell you on whether the trend's moving there. Obviously, as you know, we have the capacities, we have the product range. We have built an independent sales team. For the decorative veneer business. We've invested a lot of money in the marketing. Doing exhibition shows, doing print campaigns, digital campaigns. So there are a lot of activities. To drive the revenues, and yes, we want to do more. So I think we'll just see a couple of more quarters to see whether this is sustainable in terms of volume, value, and margins or not.
Are we doing anything with respect to increasing SKUs or probably coming out with newer products or any lever in that way?
So that's a constant effort of adding products in the veneer segment. But largely, what we are doing now, we're not increasing more species. We're increasing the treatment of the species, so inventory doesn't go up.
Okay.
It's like one veneer which can be treated in 10, 12 different ways to offer a new product to the market. So really, we're not adding the core SKUs too much, and we don't need also.
Right.
So it's like doing a treatment on that particular species and creating a new category or a new product out of that. But yes, the new range offering, marketing initiatives to drive those revenues are constant. Yes.
All right. And so lastly, on the export side, while we have seen sluggishness in the export volumes, which market has been one of the pain points in the last few quarters, and where are we likely to see growth opening up going forward, possibly over the next, say, 3-4 quarters?
Right. So last quarter, although we see a volume growth of 7.7%.
Right.
Actually, and I think Ashok mentioned that somewhere in his communication, we've had lower sales actually in all the three subsidiaries. US, APAC, and UK, which I'm quite confident will change hopefully in this quarter itself. So pain points. Really, there's no one specific market where we are, struggling too much. I think since the base is there, we need to improve the numbers across all the markets we are present in. We're not adding new markets. We're really concentrating on maximizing the numbers from these markets. So I think it's an overall impact, and we have teams deployed across various markets, and we're not expanding our geographies too much. But I think we'll see improvements, very very soon on the export front also.
I think Europe subsidiary should start doing well because that's the newest of the lot, right? Which should start seeing traction.
Correct. So Europe, the sales into the UK is happening through the subsidiary. The rest of Europe, we still, showing as exports from India because we didn't want to add one more layer of cost of managing documents and clearing containers and all that.
Right.
So if I put in talk of the Europe business, it's doing fairly well. We're running quite full, with the order positions from the European business. And some positive developments happening with some large key OEMs and I think very shortly we will see some good feedback on the export business also.
Oh. Great, sir. That's it from my side.
Thank you so much.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants. If you wish to ask a question, please press star and 1 on your touchtone telephone. Next question is from the line of Sneha Talreja from Edelweiss. Please go ahead.
Good morning, sir. Thanks a lot for taking my question. This is more pertaining to the domestic laminates revenue, which has actually grown by around 18%, and volumes also seems to be grown by at a healthy pace of 14%. Just wanted to understand why is your guidance at 7 to 8% then, if the volume seems to be growing at double-digit rate?
Yeah, so like we said, the base of last year's of Q3 financial year 17 was low, so you're seeing a high jump in this particular quarter. Overall, if you look at the 9 months math, we are at.
Yeah, but Sneha, coming to your point, even in the 7-8% which you are talking, that is more of a overall domestic growth in this year is in the double digit only. Even in the 9 months also, the figure remains at 13.7%.
In volume.
Yeah, volume.
Okay.
Volume and in value, it is around 19%.
So you mean from next quarter, the growth should be again back to somewhere near the single digits, because this quarter we benefited from the low base of last year because there was a decline of around 10% in the domestic business last year.
Well, we need to see.
Oh,
No, say again, just for the question.
Those quarters, whether
Right.
double digit.
Well, I never used to do double digit only, it's unfair to say that, we want the growth to be in single digit, but, let's see how the e-way implementation happens and, yes, there's more room in the domestic market. We can grow the business, so.
Right.
Yeah.
With relation to that itself, if at all you can explain the current scenario in the domestic market, we know that e-way bill is still anticipated, but how has been the growth of organized player visible and how is the industry growing?
Can you just come again on that question? We were just.
So just wanted to understand how is the overall industry growth rate in the laminates division in the domestic market?
Well, I don't have a clue on what's the overall industry's, growth percent. There were disruptions in the first half of the year because of the GST. The real estate situation is known to you guys, better than me. So I don't think there's still much traction on ground, in the domestic market from a construction perspective. And so I think it's quite subdued, if you ask me personally, on the overall market situation.
Okay, why I wanted to understand it, in some of the categories, what we are getting to know is that unorganized players have become more aggressive because there are no checkposts and everything. That is what I wanted to ask about laminates. Are the unorganized players growing more aggressively and we are also waiting for e-way bill to change the scenario, or our situation is somewhat better?
Well, surely we're not waiting for e-way bill to come and change our lives. We're still working to build our business. So whether the unorganized guys are growing more aggressively, I can't comment on that. But yes, they're doing business as usual. The expectation that post-GST, compliance levels will increase. At least I don't see that in the market. But saying that they are going more aggressively may or may not be the case. Yeah.
Okay, sir. Thanks, sir. That's it from my side, and all the best to you.
Thank you. A reminder to the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Next question is from the line of Anand Dubey, individual investor. Please go ahead.
Hello.
Hi.
Hello. Good morning, sir. Sir, I just want to ask you about the overall production, about the laminate division and veneer division.
Okay.
And my second question is regarding average realization per sheet for the laminate division.
Yeah, tell me.
Sir, I just want to ask these two questions.
Okay. Yeah. So in terms of production for the quarter, laminate was 3.37 million sheets.
Okay.
In comparison to 2.85 million sheets Q3FY17, a growth of around 18%. In 9 months, the figure is 10.47 million sheets in comparison to 9.31 million sheets last year.
Okay, sir.
And another in terms of realization, the 3-month realization of laminate is 701 and in comparison to 683 previous year, same quarter. For the 9 months, yeah.
Okay. Sir, can you give the last 2 quarters average realization?
Probably I will mail it to you.
Okay, sir.
Yeah. Is this only, you want only for the laminate?
No, I have also want veneer division and other two division.
Okay. I'll mail the details to you.
Okay, sir. Okay. Thank you so much, sir.
Thank you.
Thank you. We take the next question from the line of Kritika Subramaniam from IIFL. Please go ahead.
Hi, sir. Thanks for taking my question and congratulations on a great set of numbers. Sir, I just had 2 questions from my end with respect to the deco veneer segment. When I was just looking at your EBITDA margins ex floor and door, in the veneer segment, we've clocked an EBITDA margin of around 23%. I just wanted to understand in terms of sustainability of, these EBITDA margins. And the second thing is we have registered a utilization of around 46% in this segment. While I understand that the volume growth is on account of a benign base, what kind of utilizations are sustainable in this segment?
So margins of the decorative veneer business at 23%, 22.9% precisely, I'm not sure whether it's sustainable or not. Yeah. And the margins are there primarily because the volume growth has been there, utilizations. The recovery yield has been quite positive. Currency has been favorable, where imports, where the segment is, where all the RM is imported and the entire sales is in the domestic market. So whether this is sustainable or not, I'm not sure on that yet. And we'll have to see how the business moves the next couple of quarters. Obviously, from the management, from the company side, we want to do more. So this is my comment on that. On the utilization, again, this 49% utilization, we did exactly 46% utilization in Q2 was 44, Q3 is 46, yeah. Yeah. So obviously this is purely sales driven. So from a production capacity availability, from ability to run the plant, there is no problem. We can run, we can produce more also. So this is again really more sales marketing. It's more of a sales and a marketing challenge on how much we can sell while maintaining margins and while maintaining a working capital cycle of debtors. Yeah. So we'll have to see this, Kritika.
Okay. And sir, as you indicated, what is the percentage of raw materials that is imported for the veneer segment specifically?
So veneer segment, for all practical purposes, 100% of RM is imported.
Okay.
The decorative veneer, the base ply, some adhesives includes they're imported products, but they are sourced locally and the resin is made locally. But for all practical purposes, the entire RM is import based and sales are all domestic business. Yeah.
So, sir, typically, due to the currency appreciation, what percentage of the margin improvement would you attribute to, the appreciation?
So, well, typically, in the veneer business, if you look at the gross margins for this quarter, I think it's nearly 52-53%. So RM cost is 53% gross margin, so RM cost is 47%. And if 100% RM is imported, you can assume 3 to 4% is currency appreciation.
Right. And sir, just one basic question from my end. Forgive me for my ignorance. I just wanted to understand that in terms of realizations in laminates, I understand that in the export market it's slightly lesser than what it is on a per sheet basis in the domestic market. What I understand is that there are not a lot of Chinese players, who are competing with us, considering the number of SKUs that you need to service this particular segment, which doesn't make laminates very scalable. So why are realizations in the export markets lower?
Yeah, so if you look at last quarter, on an average relation of 701 rupees a sheet, domestic is 758 and export is 634. So if you look at dollar term realization, probably we are, relation grew versus the previous quarter, but relations are low primarily because you have, besides the currency appreciation calculation, you also have lower thickness products being shipped to the export market, where the unit prices are lower. So on the Chinese do compete. They are in the market. They are also a large producer of HPL. But we don't end up competing with them as a company. They end up competing more with the other local companies and of India and of their own country, because they end up producing only the liner sheets, which is 0.5 millimeter thickness. So reasons why export pricing is a bit lower is one, because lower thickness products contribute a fair share of the total exports of the total exports we do. And the currency conversion has also contributed to a little lower relation. Ashok will add.
Yeah, and one more point, in case of domestic sales, all the sales and marketing cost is borne by the company, whereas in case of export, most of these expenses has been borne by the distributor. So this is also one of the reasons that the realization will be lower. Even at the net margin level, there will not be much of a difference.
Okay, great. Thanks a lot, sir. That's all from my end.
Thank you. Next question is from the line of Anand Dubey, individual investor. Please go ahead.
Sir, once again, just I want to ask you.
Yeah.
Just I want to ask you about your sir, capex planning. How do you the capex for this year and next year?
So in the laminate segment, we have done one expansion in this year, Q1 of this year. So as such, as of now, we don't have any other capex expansion plan in laminate, and rest all the three divisions are having enough capacity. So most of the capex now will be maintenance capex, which is typically around 20-25 crore every year.
Okay, sir. Okay. And what about the sir next year planning?
Next year only I am planning, because this year is virtually over. So FY19 only we are talking. As of now, there is no formed up plan for expansion in any of the products which we have as of now.
Okay, okay. Thank you so much, sir. Thank you so much.
Thank you. Well, that seemed to be the last question. I now hand the floor back to the management for their closing remarks.
Friends, thank you so much for joining into our call, and I hope we've been able to answer your queries up to your satisfaction. One or two queries need to be responded. Ashok will respond to you on that. And for any more questions or queries, you feel free to get in touch with us or with our advisors here. And thank you once again. Have a great day ahead.
Thank you.
Thank you so much. Thank you.
Thank you. Ladies and gentlemen, on behalf of Greenlam Industries Limited, that concludes this conference. Thank you all for joining us. You may disconnect your lines now. Thank you.